Guys, it is 5 o'clock. It's Monday, and holy crap, we've got some major news coming down the pipeline, and we're both going to talk about it. Steve's probably a little better positioned to talk about this than I am, but today is February 10th, 2025. We've got CPI numbers coming out tomorrow. That's right. Well, there's more stuff coming out, but CPI is the one we're worried about, right? Not worried about, interested in.
Yeah. Yeah. So, yeah,
Oh
let's
no,
do our
it's not.
intros though.
We
But yeah,
can't go straight into it. Come on, man. This dude has been talking about this all day. This dude here, guys. I'm Chris. I'm a real estate broker just outside of Austin, Texas, and Dripping Springs, Texas. It's my buddy Steve. He's a mortgage loan originator with Motto Mortgage in Lago Vista, Texas, just a little bit north of me, outside of Austin, Texas. And we do this thing on this show where we try to talk about real estate and mortgages, and it always ends up being economics and macroeconomics and stuff like that. But it is Monday and it's after 5 o'clock. So we tend to drink a little bit of adult beverage on here. What are you drinking today, man?
I'm having a little bit of adult beverage.
Yep.
I'm having a whiskey, my friend.
Dude, that is the biggest pour of whiskey I've ever seen.
Yeah, I usually have two beers
No.
on the show, and I didn't want to have to get a second whiskey, during the show, so I figured I'd just kind of overdo it.
Now, look. All right, man. Okay. No, I am having whiskey.
All right, I'm
You are
having
having
a
whiskey with
cherry
other shit
whiskey.
in there.
Sorry, cherry whiskey mix with Dr. Pepper is what I've got here. So yeah, I see what you mean, but still, cheers.
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 See, when it's this cold, yeah, whiskey is mm, whiskey hits the
So
spot
good.
when it is this cold. All right, man. So there's like 1,000 things going on at once, but I want to set the stage for this the way that I understand what we're going to be talking about today. Okay. And that's this. There is we've been talking about revisions and stuff like that with CPI, BLS numbers, all sorry, core. Wait, what does CPI stand for?
Consumer price index.
Consumer
Put me on
Price
the spot.
Index. Thank you. Thank you for the love of God. We've been talking about it forever. And we've been talking about also revisions with BLS, Bureau of Labor Statistics, revisions and all. And so these are things that are kind of mainstays on the show. But what you sent me today was like, hey, there might be some major implications on this.
Yeah,
So
but it's also important to mention why we look at CPI, and that's because it
yeah,
affects the interest rates,
right, right.
right? In
And
fact, go ahead.
well, I was just going to say, so people understand CPI is a measure of the increase in inflation, and it comes out monthly. And then at the end of the year, they do a kind of a compilation, and you can see kind of what happened throughout the year on that. So this is measuring, it's not measuring inflation, it measures how fast inflation is accelerating, or I guess in theory, it could decelerate. We just haven't seen much of that in the last 10
So,
years.
so like, look, y'all seen that movie, the Big Short, when the main character is sitting there looking at numbers on a screen, and everyone else walks in, and they're like, "What are you looking at?" Right? But like he's okay. So I want to show you kind of the same thing that he's looking at, but in the mortgage world, okay, and also in the inflation world, right? So these are actually he'd probably be looking at these too, but more in
Yeah.
depth. So he would click on each one, and it would open up to a whole nother book of other ones. But if you could show, please, Chris, the one where I asked you to search for 2019.
Yeah. So I'll bring that up first.
This is
Oh my God.
extremely boring. No one wants to read through this. Please don't read through it. Please do show what it is. You know what I mean? Be brief about it. But God, please, for the love of God, don't go through the whole thing.
Yeah.
Um,
Well, and so do you want me to have both of them brought up together?
no, I just want you to go for the one that I sent you.
2019 or the one you sent?
Um, let's see. The link I sent to the actual article that's referencing the big bombshell.
That's this.
Okay, thank you. I was looking at it on my phone. It doesn't look the same on the computer.
So this is 2024 CPI, and this is all of the last 6 months of 2024, and then adjusted 12-month ending December.
Right now, anybody can make sense of what they're looking at. This is plus or minus what the inflation is doing. Great. Okay. I like the price of those in general. Okay, go down and start reading, not reading, but maybe zoom in on the text. Can you zoom in on the text?
Yeah, I think I can.
Okay. This kind of stuff, right? The non-alcoholic beverages index fell 0.4% in December after rising 1.4% the previous month. And okay, great. This will put you to sleep so quickly, right? You
Yeah.
scroll down there, you've got energy, keep scrolling down. Great. Okay, now do the control F and hit 2019, please. So buried in this data
Okay.
is a revision uh, uh, um, for
Oh, seasonally adjusted index. Okay.
right, but it's going to affect CPI, and it's going to go all the way back to 2019.
For revised seasonal factors and seasonally adjusted indexes for 2019 to 2023 were calculated and published. For series which are directly adjusted using census data, seasonal adjustment software,
Okay.
this points out because I read or saw an article, I didn't read it, about the use of AI and CPI numbers. So this is
Okay.
what it's talking about.
Okay, but this was released Friday, I
Yep.
believe.
And it
That
says,
which was released Friday is what no one reads. Like in The Big Short, when they're like, "You actually read that stuff?" Like the whole book that comes out of all these.
yeah,
Okay, yeah, he went through all of them. He figured out there was a big problem. I don't know why you would. I'm sure there's an official reason, but I'm not going to buy it after so much time we've been through. After what we've been through for so long. I
right.
don't know why we would go back 4 years to adjust numbers to then update CPI. But
Brother, that's 5 years. Well, okay, I see what you're saying. Yes, okay.
right, because it doesn't go to 2025.
Yeah, yeah,
But long story short here is this has the potential to be a nothing burger. It was just in a rounding error or something, but I don't think so. This should be big. Uh, Hardly anyone's talking about it.
what?
It was difficult to find anything written up on specifically the 4 years.
Yeah,
Uh, but this if they do, specifically the department that releases this data, if they do what they have been doing, we could have a major crash tomorrow. And I don't mean to say it like well, you know what? I guess I just did say it. So
yeah,
there you
you
go.
did.
But if they don't, then hey, maybe it could be a huge nothing burger. I don't know.
Yeah.
I
Well,
think it's not going to be. I think it's
and
going to be
so
a big deal.
here's the thing, man. You and I, like I said, we've been talking about this for the last, at least the last year, about how all this data keeps getting
Right.
massively revised,
Right.
all these numbers every damn month. And now they're like, I mean, I'm trying to think. It's sticking in my head that there's something kind of major that happened that just came to an end that is like 4 years old, and I can't put my finger on it. Oh, that's right. We just got rid of a president.
Oh Jesus. Okay. So let's just go and play this out. All
I
right.
mean, I look.
Let's assume. I know. Are you good? Let's assume all hell breaks loose tomorrow because we go back 4 years and oops, we made a huge mistake and CPI is way worse. Inflation isn't 30% on food, it's 300% on food, that
Right.
kind of thing. In that case, the stock market might not do very well, but mortgage rates should, in theory, drop like a rock.
That's true.
So, this kind of bad news for this show would just be phenomenal. For everything else, terrible. But specifically for this show, which talks about mortgage rates
Yeah.
and home sales, right? What Austin is doing
Well,
could be fantastic.
but the reason being, and that's the thing, is if inflation goes up, well, it's gonna like it hurts purchasing power. And so how do you keep the housing market afloat? Because it's such a massive part of the economy. You kind of have to you kind of have to drop the rates. I mean, that's the nuts and bolts of it.
Well, you make
So
me first, right? So
yeah,
the rates do what a normal person should do with their money, right? A non-bank. So theoretically, if inflation is going to be zero, so we're never going to have any sort of inflation whatsoever. The price of milk today will be the same price as it is in 50 years. Okay, go with that.
yep,
Then, hey man, why should I give you 6 or 7% interest rates? That's stupid. No, I'll give you a 2% interest rate,
right,
right?
yeah,
If I know inflation is going to be zero, then you don't get a lot back. If I think in 10 years inflation has gone up 2% every year, then you just paying me 2% only covered me for 1/10 of my issues,
that's
right?
right,
And I got a big problem now. I've lost a lot of money by lending you money, right? So you have to bake in inflation.
yeah.
Um, keep going. Let's just move on
Well,
before I
no,
keep getting
that
down this
that's
rabbit
good.
hole.
I just wanted to come back up here and talk a little bit through the numbers, because you're saying 2%. Okay. One of the other things that we talked about last year is that inflation was accelerating. And so you can see it on just about every line. All right, food came down and food away from home came down a little bit,
See, they
but
just
all items, this is not inflation. This is the rate at which inflation is accelerating, and the acceleration is accelerating.
well,
So,
all those should add up.
well, to 2.9, right? But I'm just talking month over month. Like the increase in inflation is increasing. So it's starting to go faster as we got to the end of the year.
Okay, I can see that right here. Well, at least on some of them.
Yeah, yeah.
Um,
And I'm saying, overall, obviously there's outliers and I mean, hell, like gas, what the crap is going on with gas? Gas
gas isn't fair because we in the last administration they borrowed from the strategic petroleum reserves
to keep the
to
price low.
keep the price down. So, now the reserves are close to empty, and right when the new president takes over, new administration takes over, and so they're going to either have to stop using them or to borrow. I actually haven't seen anything about that story in a long time, so I don't know what I'm talking about at this very moment. I know
I
about the
saw
past, right?
I saw a write up on it the other day. Trump said that he's going to fill them back up.
Now I heard that, but I guess that assumes that they're empty. Okay, so or close to
Yeah.
empty or low. Otherwise, you can't fill them up, right? But again, I haven't read anything recently on to the as to their state or have they been adding or not adding to the
Oh,
this overall supply. I don't
yeah.
know.
I should have pulled it out because there's a chart that 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 tracks it. And that's source capital, strategic oil reserve. Well, never mind. I was going to pull it up.
Well, you remember you and I talking earlier about specifically groceries and how people were finding their bills online from like 2020
Yeah,
and then
yeah,
hitting that reorder button and it was like 3 times the cost.
yes.
Well, the official stats that we've received so far from the government have told us that food prices should be up something like what 30%, something like that since 2020.
Yeah,
But they're missing a zero according to the
right.
videos we've seen. It should be
Yes.
300%. So when I hear that they're going to do 4 years of revisions on something we know not to be true, right? We know they're lying to us. I can see it. You can go watch it. It's
No,
right in
yeah,
front of your face. Don't trust your lying eyes, they say, right? Well, guess
yeah.
what? It's right there. So again, this could be a nothing burger, but hey man, you know what 0.1 per month of inflation will do over a 4 year period of time?
That's a lot of damn
Do,
inflation.
do you know what I mean? And then you add it on top of what's already there. I mean, I'm not predicting that's what's going to happen, and some of this data is out. So there are people on Wall Street that are supposed to be digging through that data to see if there's anything coming up, right? I
Yeah,
bet you at this point they just feed it to Chat GPT or something. But
more than likely.
who knows? Who knows? We'll see tomorrow. We'll find out tomorrow what it looks like.
We will. And I was trying to find that, and it's not the strategic oil reserve; it's the strategic petroleum reserve. I know
Yeah,
there's a counter.
SPR,
I
man.
found somewhere I just couldn't find it quickly. That data was all outdated. Okay, so on that note, I'm going to pop into this article that you and I talked about because I mean, it's real quick. But let's go through this. And you know what? Honestly, I don't know anything about Forex Live. I have no idea who this is or who Adam Button is.
I liked how fast it was, straight and to the point.
Yeah, it really is. And oh, that's a
He,
funny. I like
he
that call.
clearly spent a long time on the picture, that's for sure.
It's an AI image, by the way. It's funny. That's seriously funny. Okay. Okay. The highlight of this week on the economic calendar is the January US CPI report. It will likely be a market mover, could change the narrative around the pace of Fed easing. Okay. So are we back in a period of quantitative easing right now? Is that official?
What?
I mean,
No, but
are
but
we in? We've been in QT, quantitative
well,
tightening.
yes, sorry, yes, but he's trying to sell. They're trying. Okay, so this week specifically, we have like what 110 billion dollars for sale, and if
Yeah,
that it's an auction that's happening and by that I mean
yeah,
bonds for anybody that's not as nerdy as me. And so I mean it should make a huge impact no matter what. So if they all sell, then that's fantastic. If they don't sell,
oh,
then we have to raise the rate so that they look attractive enough to buy. And so it needs to be a good sale, or we need to have some really bad news so that we drop rates. But um,
oh,
so as always,
wait,
it's a
it's
little more
coming out
complicated than that.
tomorrow.
Huh?
What's coming out tomorrow?
Tomorrow's
Yeah,
a CPI.
no, or we need
Oh,
to have some
sorry.
really bad news so we can drop. Yeah, okay. Uh, all right. So month over month CPI, they're saying is 0.3% to the positive, year over year 2.9. We just saw that core
We don't
CPI.
want positive.
Well, we don't. But I mean, honestly, and this is what I was saying a while ago. How many times in the last decade have we seen a year over year negative CPI, like inflation backing off or deflation, as it would be known?
It has been, but recently it's been ramping up. And so what they're saying here is that they're expecting that will be at somewhere between 2.9 and 3. Well, that's not true, but basically at those two numbers, those are the forecasts,
Right,
right?
right.
But we don't know what it's going to be until tomorrow.
Yeah. So now it's tough to say what every economist was factoring in. Which how do economists factor this in ahead of time? Like, are they just like, oh, here?
Most of them will look at the earnings calls from
That's
companies and things like that, see what's going on.
okay.
Also, the
Okay,
the PPI, the producer price index, that's what companies pay for things.
that makes sense. All right. Um, that's because many annual adjustments are priced in January, and those are generally focused on what the Fed calls non-market inflation or prices that tend to lag, like insurance rate, hospital prices. That's interesting. Okay. That's important because those types of inflation have been problematic in conquering the last mile of inflation. That's an interesting, you know what? And until I read this, and this is the third time I read it, and it usually takes that many times for it to sink in for me. That's really interesting because most of the CPI numbers are leading edge type stuff, right? Food, gas, stuff you see at the pump.
Well,
But insurance, hospital prices, that's crap that doesn't show up for another year down the road.
so this is the big problem that we've had over the last roughly 4-ish years. I'd say 3 years, is that people haven't been able to trust the numbers coming from the government because they keep changing. So they've had to
Well,
go get
they
them.
change what's in the numbers, right?
Well, more specifically, they keep changing how you calculate the numbers,
Okay.
right? Remember
Oh,
how
so they're
right after the
changing the
recession
rules
started,
mid-game? Come
huh?
on. They're changing the rules mid-game?
Yeah. You remember how 3 years ago when that recession started, and then the day after the administration changed the definition of a recession so
Yeah,
that we
yeah,
weren't in one.
I do remember that.
That's stuck. So now it's technically nobody really knows if it's a recession or not.
Anybody's watching at home, Shelly is obviously rich because she's having ribeyes for dinner.
Lucky.
Um, and nobody can do that in a recession. Okay, so anyway, that finally, again, like I said, the third time I read that, it actually like sunk in, and I was like, whoa. It's important because those types of inflation have been problematic, conquering the last mile of inflation. The worry on Wednesday is that we see a return of the January effect that boosted CPI last year and kicked off a series of first quarter worries about inflation. Okay. Do you have a good enough memory to remember first quarter of last year and inflation?
No, not
I don't
really.
either. Should I open that article? Nah.
Sure.
Okay, sure. Let's see. What did they say last year? January core CPI of 3.9 year over year. Holy
So they were
crap.
off.
They were off. They were under.
Sure,
Damn.
but more specifically, it was up.
Up.
Um,
Yeah.
right.
Okay.
So you can go back. That's all I need to see.
No. Okay. That's all it was. All right. So that's interesting. And I guess obviously if inflation is increasing at a faster rate than what they anticipated, oh, well, we're in for trouble. Okay. So what's at stake? Last year with the hot CPI report, the year-end pricing for rate cuts fell by a whopping 19 basis points. If you're not up on sarcasm, it didn't move. It was flat. This year, there are only 42 basis points of easing priced in, so the stakes aren't nearly as high. And the market is far more focused on tariffs and politics at the moment. That said, the market will react, and I'm biased towards the US dollar strength on a hot print. Um, Basically, what this guy's saying, at least the way I take it, is that it doesn't really matter because the strength of the dollar is up right now. So even with inflation, we're still coming out better than most countries around the world. Am I reading that correctly?
Well, yes. Um, but yes. The answer is yes. I could talk till I'm blue in the face, man. There's lots of problems, specifically in China and then other places of the world right now,
Yeah,
that will affect jobs, that then affect the tech sector and other people moving here, and so but I do think there's enough. I think there'll be enough activity this year to either have regular growth or a large amount of growth. But I actually don't see Texas losing much more for much longer. Um,
I can't, dude. I'm
well, I
telling you.
can I can
Well,
see it, but I think we have too much investment coming here.
can I'm going to throw this out. I've got a client, and she is a regular watcher of this show, and she is focused on moving to Georgetown. And she texted me this morning, and it was the third time that a house she was watching has gone under contract in the first week that it was on the market. And for those
Weak.
that don't know, first week. For those that don't know, Georgetown, Texas is north of Austin, about 30 miles from downtown, right on I-35. It's got a university, Southwestern University. It has a lot of medical with nursing schools, medical schools, and stuff like that. A&M, Texas Tech. Um,
Yeah, 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 but somebody
like
showed up and said,
there's a bunch of stuff going on in Georgetown right now, and it's a cool place. Like
but
Georgetown's a really cool place.
I'm still
Okay,
stuck on this.
but
Somebody showed up and said, "I want your house." Oh, just kidding. And then another person said, "I want your house."
no, 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 no.
Just kidding. And then
Separate properties. All way like she's tracking these properties. She really likes them.
thought you said one was under contract 3 times in a week, and I just could not understand that
No, 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 no.
scenario on how quickly they moved and then ran. But go ahead. That would have been so interesting.
It would have been three separate properties that all went under contract in a week. The most recent one had multiple offers, which let's be honest, probably meant two at this point, but still had multiple offers in the first like weekend on the market. And so there's pockets that are still just crunching along. And Georgetown's got a lot of new home inventory as well. This is not a new home that she was looking at. So if that market is moving like that for resale homes, the new home market up there is popping right along also. Okay. It's anecdotal at best, and I always say that, but you say that you don't see Austin being down for much longer. I can't see Austin being down for much longer. Again, there are pockets of Austin that are going to be down. Dripping Springs is one of them, and I could go on and on about why Dripping Springs is a unique market and why we're not seeing people move here right now. And if you want me to, I will. But there's pockets that are going to be down. And there's pockets that are going to be exploding because what's going on in Austin from a tech boom right now and from really just an economic boom, seriously, it's still happening. You know, everybody sees or not the global, the national headlines about, oh, we've got all this extra inventory and we have this and nothing's affordable. You and I've talked about it on here before, man. Austin's not it. Austin has affordable housing. You may have to drive an hour to downtown. Doesn't mean it's unaffordable. Go find out where you're going to live if you're driving an hour in San Francisco or LA or New York or Newark, New Jersey or whatever. Like you ain't finding shit within an hour of your job. So,
And they too complain about their real estate. That's true.
and they complain, and we all complain about our real estate, right? Steve, when's the best time to buy a house?
2 years ago.
Oh shit, I didn't buy one. Now when's the best time?
2 years ago.
Okay. Damn it. Now when?
Right. 2 years ago. Right. You know,
But it really is. Oh, you know what we were supposed to talk about today?
hmm.
We still have 10 minutes. Let's talk about this. Are you ready?
Yeah, I wanted to say something about something, but go ahead.
Sorry, go ahead. No. Finish up on the CPI report and all that stuff.
No, I'm
Like
finished with that. You go ahead. You go. I think I'll save it for next week.
I don't okay, I feel bad now because I just kind of derailed everything.
You did not. Go ahead. Go ahead.
So I sent you a text or a tweet last week where a guy was saying, well, a little bit of backstory. During the run up to the presidential election, there was one candidate who said, hey, we should give $25,000 to any first time home buyer. And you and I both laughed and said that will only raise the price of homes for first time home buyers. And but the other candidate really didn't say anything for a solution. And you and I talked about that. And my solution at the time was, look, we need to get rid of the time that it takes to continue or to start building a home, right? We need to reduce the limitations that are caused by zoning and all this other stuff. And I don't know if you had a thought on it at the time.
I think I
Anyway,
said get rid of the CFPB, but yeah, go ahead.
get rid of the CFPB, which coincidentally looks like it may be
If
adjusted.
I think I followed it up with, but that's a pipe dream and will never happen. When I read
But
about that, my jaw dropped to the floor. But again, he says a lot of stuff, man.
yeah,
We'll see what happens.
and if you're again following at home, the CFPB could be going under some massive renovations, and CFPB, Consumer Financial Protection Bureau, came out of the 2008 financial collapse caused by the housing market. And evidently, there's a lot of money being spent in there, and I guess it's not very efficient. We'll leave it at that.
You know, they're the ones that made it illegal for us to deny somebody a loan,
You
uh,
being a
uh,
lender.
like when they qualify, but then said that we can't charge them enough, otherwise it's illegal for us to do the loan. I didn't
Right.
say it that way. I'm sorry, I said it wrong. We have to set some of our fees in stone, so when the loan price gets low enough, we'd end up having to do the entire loan for free, and in a lot of cases, have to pay money ourselves to do the loan for someone for free, which most companies have just stated they won't do. Go ahead and sue us, you
Yeah.
know, and I don't know any lawsuits yet, but you can imagine operating knowing that you're gonna be sued someday by a huge financial, a federal bureaucracy that probably was going to make an example of. I mean, it's just a scary kind of thought process. Just why don't we just iron out the law and make it work for everybody? Instead of making it impossible to operate legally. And so that's what I meant by shut them down. I didn't mean shut them down entirely. I mean, they do a lot of good stuff too, I'm sure. But when you
Yeah.
tie somebody's hands like that and put that noose around their neck, so when they go to bed all night, and thinking about, what I mean, it's just, and there's many, 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 many more things that they've done too. That's just the one that makes the most sense, the most obvious.
Yeah. Yeah. But anyway, to the point that I was getting to earlier, what we were going to talk about is right now in this economy in real estate, as a buyer's agent and a seller's agent, I see this all the time. And when it is a buyer's market, which we are firmly in, especially in Dripping Springs, Texas, USA, most of Austin, evidently not in Georgetown, um, you can ask the sellers for credits. Okay, we'll call them credits. And those credits are dollars. And as a lender, when somebody gets credits from the seller, where can they spend those dollars?
They get to apply them to their costs on the mortgage. Not all of them, but the majority of them can be covered. Typically, if you're working with a good realtor and lender combo, they won't ask for more money than they can use. I have seen this happen where you get
Because
too
what
much
happens
money.
when you do that?
You lose out on the money off in a
Hey,
lot of cases.
Steve, as a seller, will you give me $150,000 in credits to close this house?
Man, this is difficult. So let's put it this way: the amount of money you are allowed to ask for and the amount of money that you are allowed to use are two separate things, believe it or not. So, if you have the minimum amount down on a mortgage, depending on loan type, you can borrow, let's just say, right around 3% from, not borrow, you can be gifted around
From the
3%
seller. Yeah.
from the seller, right? That can go all the way up to 10%. Again, depending on how much money you put down and the loan type, and this, it's so complicated that call me if you want more information on this, okay? But as a quick example, go ahead.
This is why he said you have to have a lender and a realtor working in tandem. Go ahead.
Yeah, and it gets really complicated. And then if I give too much information, then I'm liable for giving you loan product information, and then I have to go into more details that you don't really want, like APR, et cetera. And what was the rate? Well, okay, I can't say rate. So
Thank you, CFTV.
it's yeah, again, yeah, it's annoying, right? So I mean, just I just want to get some information out here, and the point is that the seller can give you money. You can use that money to better your situation in the house. You can use it to buy a better interest rate. You can use it to offset your closing costs. It can be used multiple ways. You can even use it to buy out of mortgage insurance if you really got a lender that knows what they're doing, right? But today I would never do that because I expect rates will go down at least a little bit soon and that you would refinance. And when you refinance, you may find that you have mortgage insurance. So, right. So buying
Yeah.
out of it today might not be a good idea. Buying out of it when rates were 2% was a great idea, right? Anyways, work with the lender that knows what they're talking about. Work with the realtor that knows to talk to their lender before asking for money, so that
Right.
or what they're doing, so they don't ask for too much, because then they look like an idiot. What do we do with the extra $2,000? I don't know, nothing. And so
Well,
nobody
okay.
wants to say
So that,
that, right?
but that's a good point. What happens if I ask for 20,000 and the title and lender and everybody else ends up saying you can use 15? Like I get a check for five
You
thousand
give it
dollars, right?
back. You give it
No, I
back.
did it. I'm the buyer. They said they would give it to me.
Right. But now it's the sellers because legally the government says you can't have that much.
That's right.
Now, unless we're talking VA, in which case I can pay down your credit cards. I mean,
Yep.
oh my God, VA has
VA opens up
so
a
many
whole.
options.
Yeah, that's right. That's right.
Yeah, and those realtors out there that still think VA is a bad mortgage and that don't want to accept a VA loan are fools, uneducated idiots, and you can tell all of them that I said that. You can show them
Yep.
this show, and I'm happy to have them call me because the VA is the absolute greatest purchase loan on the planet,
Yep.
right? Maybe not planet, I don't know about that, but in the United States right now for a residential mortgage, you can't do better. You get
The-
so many protections in areas on both sides that you just have no idea about. I
yeah.
I hate the attitude of, well, if it's VA, we're not going to take it because we don't have to pay all those fees. Do you know we can change the amount of those fees down to like $1, so your
Yeah.
people can pay like $10, right? Like
Yeah.
like at the end of the day, again, I just said a number and I shouldn't have said that because this is not an intention to loan or to lend money. But call me if you think VAs are bad loans. Call me. Let's talk
He's
about it
talking
because
to
you are
realtors right
wrong,
now. Yeah.
huh?
You're talking to realtors.
I'm talking to really listing agents,
Yeah.
the realtors that go to houses that have been doing this for 20 or 30 years that haven't kept up with mortgage loans, which you really shouldn't be expected to, unless you have a competent lender that you're working with that updates you on things like that. But if you have given your clients the advice to not take a VA offer, you're a fool, and I'm happy to call you one.
Yeah.
Sorry, and I'm not a mean person, but you are a fool.
Do you have a mic
A mic, yes.
that you can
Oh,
drop?
yeah. Not on me, not in here. Sorry. I
Um,
don't know. It makes me angry
well,
when people just.
no, and it's real, but kind of. going back to what we were talking about, guys, you either have, if you're getting a seller concession, you're either going to be able to put money or keep money in your pocket up front, or you can arrange that, like he said, to save you money along the way if you're buying down an interest rate. Make sure you go through the process of figuring out which one is more beneficial to you. Um, and there's like when you, Steve says it all the time on here, when you're doing loans, there's 1,000 levers that you can move to try to figure out what the best like combination is for you.
Anybody watching that is currently shopping, if you want to have some fun, if you're trying to buy a new build, from a new build community, and they're offering you a ridiculous low rate, lots of money, I just want you to innocently call the lender and say, hey, would you just send me the numbers without any incentives to see what that looks like? Because we caught one the other day that was $35,000 cheaper without the incentives.
Are you serious?
Yeah, and they were using all of that money to buy the interest rate down, and then other things. But they were using it to manipulate the monthly payment. But people don't care about anything else usually, right? But the reality is that there is no free lunch.
No, no. You're going to pay for it one way or another.
Yeah, yeah.
That is a fact. All right, man. Well, we're going to wrap it up on that, guys. This is what we do, and sometimes we take some detours and stuff along the way. But every Monday night, we talk about things that actually affect people, not only in real estate, but also, yeah, just a little bit. Just a little bit. And my man is done with his Dr. Pepper. So,
Almost.
Steve, I appreciate you, man. We'll talk to you next
Appreciate
week.
you, brother.